Hello, everybody. Welcome to Wall Street Hackers on the Pod TV network. I'm Nick Palavito. I'll be your moderator for today's show. And today's show is going to be a very exciting show because we're going to look at Wall Street. And with that, we have the Wall Street hacker himself, who's graduated from UCLA with a degree in economics, a law degree from the University of Miami, and a master's in business administration from NYU. Spending 17 years working in New York City, he can provide insights as to where you are and what you should do and where the markets are going. So none other than Peter Bennett. Peter, welcome to your show. We've got a lot of people that are interested in listening to Wall Street Hackers. So it's good that you're here because they want to know what's going on with this market.
Oh, good. Just so you know, you're a little echoey, but we can understand you. But I don't know if you can do anything while you're off to fix that. Welcome, audience, to Wall Street Hackers. My tie is crooked. Had a little chaos there getting set up here. Welcome to Wall Street Hackers, August 5th, 2025. You can catch a new episode most weeks, starting at Tuesday around 6:15 p.m. Lawyer's Den starts around 6, and then we follow it. So we always say approximately. Depends how long Lawyer's Den goes. But that said, next week we are taking the week off. So we will be off the week of August 11th, but then back on Tuesday 19th, starting, depending on your distribution channel, whenever you're watching. So we will be back on August 19th, Tuesday, and most weeks at 6:15 p.m. Eastern Standard Time. So the markets, well, sort of no surprise because the markets were slightly down, or you could call it flat. And that's what the point I made last week was. The point was that for 8 months, the market had been essentially flat. Now that the market, the S&P and the S&P 500 and the NASDAQ are down slightly for the week. We're talking about 628 this afternoon, and 635 last week. We're getting closer and closer to total break even, especially when you're counting inflation. So these are issues for the investor because if the market's really flat and because of inflation and a lot of things going on in the macroeconomic picture, I think the markets, that's my prediction, the market's going to be relatively flat, especially against inflation for 10 years. And again, the QQQs and S&P 500, you barely moved and for 8 months now. And and by the way, the mainstream media does it. Oh, new records, quote, new records. But those records are like, well, it's up that much, but and then you add inflation factor and you're not making much money, especially against inflation. But even if you don't believe me, you can look at the forecasts of a lot of big players who I follow and, big, well-known brokers and financial companies. So JP Morgan, Goldman Sachs, and Charles Schwab, among others, are saying that it's going to be a relatively low decade for returns. They were forecasting 3%, 6%. I don't know if that was against inflation or not, but much lower returns than in prior decades. People were used to some phenomenal returns in the last few decades. And the thing is, that's an easy environment because you can throw everything as a dartboard. But now, if the market's going to be like this, it's going to be even more important. If you want to get ahead against inflation or just get ahead nominally, to be in the right places. And over 200 years of our studies show that dividend stocks are, first of all, the place to be. They outperform other stocks. Energy stocks generally outperform and on average outperform. And also selected REITs and MLPs. You want to be in companies that have defensive balance sheets and nice cash flows and generating income. And that's the great thing about income. And it's also philosophically good for the investor because let's say you're getting a decent dividend. It's like, well, I lost some money, but I'm getting the dividend still. So, and if the stock goes up, then you still have the income. Either way, you can reinvest the income where you want. So I'm a big believer in income stocks for performance historically, and also obviously for just the steady, because number one error that many investors make is selling. Basically, they panic, they sell at the wrong times. History shows that. So in other market news, there was extremely mixed data on the economy. On one side, it's really a decent economy. GDP, which is the strongest measure of the economy, was up 3% in Q2, adjusted for inflation. That's a really decent number. And again, the not bad against the media saying, "Oh, everything's going to collapse because of the tariffs," and it was not that way at all. Annual wages spiked 4.4%, which was above the less than 3% inflation rate. So workers are actually getting ahead now. At least they have been in the first quarter and second quarter. So things are heading that direction that way. On the other side, the not so positive data in terms of the unemployment picture came in, and much lower than forecast. Plus, there were huge revisions, which led President Trump to firing the Labor Department statistician, I guess, or head of it, who keeps those numbers. Massive revisions. So the unemployment rate ticked up to 4.2%. On the other side, the history is that the average unemployment since 1948 to 2025 was 5.67%. So I'm not particularly worried about that. I am a little worried about AI replacing jobs down the road. I'm considerably concerned about that down the road at some point. But if it's 4.2%, it's still a healthy economy. And also, there's still, if anything, pressure on inflation because people feel like they can look for new jobs or push for new wages. So it's an okay picture, but of course the big overhang is the other thing the media never mentions almost is the 125 trillion in actual debt that the U.S. has. And I never see it. I watch financial shows and read, and almost nobody says 125 trillion. People talk about the Social Security and Medicare like it's not part of that debt, and they say the debt is 36 trillion, getting to 37 trillion. Well, that's a ton right there. But the point is, connect the two and say, how much is that all together? And an estimate by David Walker, who was the Comptroller General of the United States under two presidents, and who I know a bit from Economics Monday, he says it's about $125 trillion when you count the future unfunded liabilities, the present value. And he's a lot closer than the 37 trillion. So we will see. And the only other big news, of course, was the tariffs. It was in the news. So the mainstream media, and I always say, I'm not a liberal. I just hate the mainstream media because, I'm sorry, I'm not a conservative or a liberal. I consider myself kind of centrist, maybe lean right on economic issues. But the thing is, the mainstream media is so unethical, and they just can spout on anti-Trump things every time, no matter what the thing is. So anyway, they've been saying the taco trade, which we predicted, it was ridiculous. Like Trump is really going to retreat, but he never retreats in his life. But so he proved he's not. He put in the August tariffs, but also here's the thing about the tariffs. One, it's already generated $150 billion in additional revenues for the United States. Given our debt scenario, which is massive, but I always have to footnote that the rest of the world, I've looked at countries in Asia, North America like Canada, and South America and Europe. These countries are all in very similar situations, underfunded pensions, and massive promises for free Medicare, pre-medical care, or close to it, and very little money put aside for it, or none. So it's not like, it's the U.S., I'll go overseas for my investments. But so Trump wrapped up trade agreements with Japan, the Philippines, Indonesia, and the EU. That's about 25% of global trade right there. And they were massively beneficial to the United States. Extra revenues, opening up the other markets. The people who are against the tariffs are wrong. Yes, it will cause some inflationary factors. Yes, it will be a problem, maybe, and I think the markets are underestimating it. But the other side is it was going to be massive inflation either way because of the huge debt and the money printing that's sure to come. So, quote of the week. This is from Barron's Weekend. I edited it, and it's a few different lines, which I chopped up. Stagflation is coming. Don't bet on the Fed. Don't blame the Fed. Number two, markets will be vulnerable to stagflation regardless of who might get sacked in Washington. And they quote a financial strategist who made a point. He said, even if the Fed cuts, bond yields ultimately are heading higher. He said he sees the 10-year hitting 5% by year end, while the 30-year long bond rate rises to 5.75% from 4.8, a pattern similar to late last year when the Fed lowered rates by a full percentage point. I don't know if he's right or not, because nobody knows. You can throw it against the roulette wheel, in terms of predicting where rates are going, and nobody can guarantee it. But the point is, he could be right. If rates go up a lot, if the long bond hits 5.75, the market's going to be extremely unhappy, and flat is going to be where we wish we were, because that would be a lot of pressure on the market. The only other point I make is Barron's, of course, writes an entire article on the coming stagflation. They mention a lot, it's all Trump's tariffs, well, and they don't mention the debt at all. Yeah, 125 trillion here or there, no problem. Okay, most interesting story of the week. So it was all over the paper, so I'm going to cover that. Why not? The mainstream media and the woke left were having conniptions over the Sydney Sweeney story. She did a jeans ad, which probably everybody knows, and they were upset because it has sex appeal, and also the headline said she has great genes. So people said this is racist, and it's sexist, and it's just horrible from the from a lot of the media and some of the progressive left. But here's the thing. First of all, 73% of viewers liked the ad, and American Eagle stock soared. I think it was up 20% or something like that, or higher. The other point is the hypocritical nature of this, because one, there was no upset by the media or anything about Dylan Mulvaney's light beer commercial for Budweiser. Nobody complained about Beyonce's jeans commercial. She had a very similar pose. And also, the one that I've noticed for years is Disney. So the, quote, princesses, has everybody noticed what they look like? I mean, we're talking about what some people might call classically beautiful. And then you look at the new additions, Tiana and Moana, classically beautiful, of different races, but thin, attractive. Now we look at the villains, dark hair, big noses, aged. Talk about discrimination against the old, the unattractive, the whatever, the bad. But have I ever heard of a single complaint about Disney doing this for over 50 years? I haven't, but I've noticed it, and maybe somebody should start complaining. Next segment. So far, no calls from the White House, but why President Trump or someone in the White House should give me a call. So forecasting the future isn't easy at all, and nobody gets it all right, but we've gotten a lot of things right, and that's very important in government and in finance. So just a few examples, when the Ukraine war broke out, the media was saying, it'll be over in a few weeks. There's going to be a short war. It'll be quick. I said, wait a minute, World War I, that's what they said. They said 2 weeks or a month in World War I, and it lasted years and years, I think 4 years. So I said, no, it could easily last for years, and the markets need to anticipate that. And then also, for months now, since January, since President was elected, I've been saying, Premier Putin is not going to cave, because he's taking a hard line, and unless we put much more pressure on him, and I think President Trump is coming around to that now, but this is now August, and so many lives have been lost, and I had an approach back then. I said, tell Putin that every 2 months, we're going to raise aid to Ukraine 10 to 15% forever until he caves. And this is exactly the kind of pressure that brought down the Berlin Wall because of economic pressure. And he should have been doing other things too, but he's coming around. But we still have no resolution to that. We also been predicting the Fed almost perfectly. For years, we said the Fed was lowering rates too much. It led to inflation. Boom, we were right. We said the Fed was not going to start raising. Then when it raised rates, we said they're not going to lower rates. And the market was anticipating 4 rate cuts, 3 rate cuts, 2 rate cuts. I was saying no rate cuts. It was 1 or 0 each of those times for a year, 2 years. So we've gotten an awful lot right. We've been very well in our investments in general. So, it's not easy to predict the future, but we have a very good percentage. Okay, let's get into something hard assets now. The investment of the week. First, disclaimers. This Wall Street Hackers is for entertainment only. These are only our opinions. There's no guarantees on our suggestions because there's no guarantees on any investments unless you hold them to maturity, like a CD or a treasury, and consult your financial advisor. So this week, I'm getting back to my favorite MPLX, my largest equity allocation, and it's been fabulous for years. Pull up the chart and say, I wish I was following Wall Street Hackers for years. But it's the reasons are two. One, because it's the most undervalued. To me, it's maybe the only undervalued stock that's so substantially undervalued with a high dividend, especially. And two, it's a perfect way to demonstrate the entire Wall Street Hackers method, because I've never done this before, but I'm going to go through pretty much all the factors I look at when I look at a company. You can take each of these factors and apply it. But when you start applying everything, it's hard to find that perfect company, but MPLX comes pretty close. So here's why I like MPLX and some of the factors I've looked at. Number one, the distribution rate, 7.4%. And for American investors, that's tax efficient extremely, because there's all kind of benefits to owning an MLP. They pass through depreciation, depletion, and also return of capital. But it should not be held in an IRA in large quantities because there's something called UBIT, and that's a big penalty. So, but nice, 7.4%. Where do you get that in a safe dividend stock, or one that could be safe? Distribution growth rate, extremely impressive for years. Fundamentals in terms of cash flows, because we always like to look at cash flows. E-Trade has them at 9 times. And so that's an 11% cash flow yield, a little higher than it used to be because it's gone up so much. But still, an 11% cash flow yield is great, especially, this is the other thing, when you look at a company with a good cash flow, which is also using a lot to invest in growth. So if they didn't take the $1 billion, the $100 billion, I guess, sorry, whatever it is that they pay in dividends, they pay an equal amount towards growth. I think it's $100 billion. So that would have doubled their cash flow if they said, okay, we're going to stop growing, but the growth is good too, because that'll increase the dividend down the road and the success of the company. As a matter of fact, the company has officially said they are targeting 12% increases in their dividends for the next few years. And then they say growth might slow, but geez, you start at 7.4 and maybe you get 12 or 10 growth. Not many companies can do that in the whole investment universe. Then you look at their dividend history, which has been phenomenal. Sales growth is up 7%. Debt over assets is the only one that's a little over what I like, 0.58. But because it's such a safe investment, because the pipelines are basically supplying gas and to a car, gasoline for cars and oil, and also natural gas to heat homes in the Northeast and other places, they can take a little more risk there. And the other thing is, if they weren't growing so fast, they wouldn't take on that much debt. But they would seem to be very good managers. Also, I look at analyst research targets. Today was about 51. The average is 57. That's generally thought of as the next year. JP Morgan, I respect them, 58. Stifel Nicholas, 57. So if they're right, then you're getting a 7% dividend, growth on the dividend, and also another maybe $7 in the next year on a $51 stock. I always look at ownership, very important to look at. So Goldman Sachs owns $730 million worth, Blackstone $936 million, and Invesco $1.7 billion. These people are considered smart by many, to say the least. 2/3 of their oil comes from of their revenue comes from oil, which I feel, for at least for the next 3 to 5 years, I don't see any diminution in the use of gasoline. Down the road, I'm a little concerned, which is why I don't have every dollar in there, but it is my largest allocation. And then that's basically, and then the other thing is technical. So I'm fundamental, and I like dividends, cash flows, fundamentals. I look at the company. It's like buying a business, but I do like to look at technicals. Just look at the direction. I mean, it went up and up and up like a straight arrow until maybe, I don't know, you'll have to look, but maybe 6 months ago or whatever, when it just flattened. Historically, that's a pattern that leads most times to it continuing its upward climb. So they have a great record, and there's nothing I can see in the fundamentals that would have slowed that growth down, except for the market decided to hold it up at this price. So it seems like a really solid company. Again, you don't want to put everything in there. And if for those who are already in MPLX or not interested in MPLX, then I would mention that munis are really attractive right now. Full state munis in some states, safe states, can get over 4%. And so for non-qualified money, in other words, not 401k or IRA, they look pretty good. Maybe I'll cover that in 2 weeks when we're back. But you need to be diversified in this environment. There's so much uncertainty. Will rates keep climbing? Will the economy tank because of AI down the road replacing jobs? Nobody knows. So diversification, as they say, is the only free ticket. That's a famous Wall Street expression, and other people have heard of it too, I'm sure. So panel question of the week. We'll bring Nick in. Hey, Nick.
Singing here for the panel.
Okay, so the panel question is, how can those who listen to the mainstream media actually believe the stories they make up? Background. So this week, a lot more evidence, and this is not like circumstantial evidence. These are the actual documents that shows that Hillary Clinton planned, and unbelievably, Barack Obama pushed a hoax on the American people for years by saying that President Trump was a Russian surrogate. And this documentation, I learned on Wall Street from my first mentor. I mentioned this the other day. The best place is to look at the original sources. Don't look at what the people say about it. Look at the sources. You look at these documents and go, oh my gosh, how did this happen? So now the media, the mainstream media, which doesn't want to hear anything about this, is barely covering the story. A lot of them, maybe they're covering it a little, but listen to their excuse. This is unbelievable. And remember, this is the media that said Trump was a Russian surrogate / spy, and also that Hunter's laptop was a Russian conspiracy. The New York Times and some others are saying the documents are a Russian conspiracy. You go, what? How can anybody believe this? It's like the documents itself that were released, that were declassified, are a Russian conspiracy. Unbelievable. So this is how you get a communist who's running for mayor in New York City because of the media slanting the public opinion. You have somebody in a mayoral candidate in Minneapolis who some say is to the left of Mamdani. Can you believe that, Nick? To the left of Mamdani in Minneapolis. He may or may not win, but he got some endorsements and maybe an indirect endorsement from the Democratic Party. It's like, what are you doing? Anyway, this is not good for the Democratic Party. I've explained this to my friends, my friend in particular, who is really a liberal. And actually, I'll take that back. He's not a liberal. I'm not a conservative. But he believes everything the media tells him. And even though his positions aren't, so he just falls for it. I don't know how he can believe it. But this is not good. I keep telling him this is not good for the Democratic Party. The mainstream media wants ratings. So what they do is they just boost stories, and they'll push stories that stimulate their viewership, and they'll say anything they want to push their own beliefs. So Nick, how in the world can anybody believe the stories they make up after time and time again? Oh, and one last little footnote I was going to say. So fool me once, the famous expression is shame on you, fool me twice, shame on me. But fool me over and over and over again, shame on you. And then it's, fool me then and shame on me. Yeah, really, shame on me. How many times do you have to be fooled and lied to before you just say, wait a minute, these people have no credibility at all, and they're misleading both the Republicans who they can get a hold of, the Democratic Party, and the country, and they don't care about ethics. So, Nick, how can the people believe this at this point?
Yeah, it's a big problem. I don't know, but the thing is, it's almost like you're being misled or led all the time by the media. So they're not presenting the facts, they're presenting their opinions. And some of them are hard left, some of them are hard right. But as we well know, in chess, you win by taking the center. In the
Oh,
center,
that's true. Good
in the
analogy.
center, your knight covers more squares, so does your bishop. But for some reason, certain parties don't get this. We had a talk with David Walker about it. He said, look, if the Democrats want to win, they need to get centered Democrats like the mayor in Pennsylvania, excuse me, the governor in Pennsylvania, the governor of Kentucky, people that are in the center. When you get people on the left wing, they're going to get their wings clipped. And we've seen that with New York. They can talk all they want to about, we're going to take all from the rich and give to the poor. Well, they did that in Venezuela, and then they were all poor, and they did it in Cuba, and they were all poor. So it's not hard to see there's strong evidence that their positions just don't work. So I think for the Democratic Party to come back, they're going to have to take the center. Do not.
It's going to take time because they won't, because the first point you made is excellent about cycles. So they're in a cycle, and I guess their viewers are in a cycle. It's like if you go to MSNBC or read the New York Times, and then you read it, and then it reinforces these made-up beliefs and stories, and then you read it again, and it just keeps cycling. And then it goes through the Democratic Party. They repeat it, and then other news sources repeat it, and they could have no factual basis at all, but they just get made up. And perfect story again is what they emphasize. That's another point. It's not just what they tell you, but it's also what they don't tell you and what they emphasize. So all of a sudden, the Epstein story is the biggest story in the world because they think they've got some division within the Republican Party, which actually it doesn't show, and because they think that it can replace the other stories about the big hoax that went on. So, and they think that maybe they can catch President Trump, but in fact, there's no way because he cut off Epstein years ago when he was stealing his employees from Mar-a-Lago, like in 2007. But also, the other thing is Epstein's been dead for 4 years, and Biden had every file in his possession, and so did these people who were making up stories about Trump. If there was something that was real, they would have released it. They made up stuff. If they had something true, they definitely would have released it. So, but all of a sudden, Epstein, you can watch MSNBC for half an hour straight, and they can cover the Epstein story the whole time. It's like, what? Again, how can people believe it? So the other side is, it's true the right media is slanted right. There's no question. But they do not basically make up stories. They do cover the other side. But sometimes they skip the stories too. But, they're more balanced, but you have to know that you're watching right. And I know that too when I watch them. I don't agree with everything they say. But when you're just making stuff up and you're willing to say anything if it works for you, that's not right. And I think the left media is much more fake. So 2 other points. One, this is not new. So there was something called yellow journalism, which is well known in the 1890s and 1900s. Here's a quote from Google AI about yellow journalism. Yellow journalism is a sensationalized style of reporting, which significantly influenced public opinion and contributed to the outbreak of the Spanish-American War. Newspaper publishers like William Randolph Hearst and Joseph Pulitzer, the Pulitzer Prize, but this is Joseph Pulitzer, competed for readers, employed exaggerated headlines, illustrations, and stories often lacking factual basis to stir up public sentiment against Spain. This journalism of action, as it is called, played a key role in escalating tensions and pushing the United States towards a war. So basically, these journalists created a war. That they're not even saying it fully, but yeah, there would be no Spanish-American War except for they were making up stories to get readers. Like, great. So this is not new. This is 1890 and 1900. Kind of rings a bell about how far the mainstream media will go sometime. And again, I have to highlight 2 of the most famous people, Hearst and Pulitzer, and they were involved in this heavily. The other point is that they lost their way in terms of journalism. 20 years ago, even though the mainstream media leaned left, they had more ethics. And people would flip out right now. If Walter Cronkite saw this stuff, and some journalists speak out about it, and people maybe when they leave their companies or whatever, they say, this is ridiculous, it's insane. But, the question is, how long will they continue to get away with it? The ratings keep going down, they're losing viewership, the pressures are building. So it will evolve that way. But in the meantime, they're hurting the Democratic Party a lot. They're hurting the country a lot. They're dividing the country. Next show, which will be in 2 weeks, I'm going to be covering the percentage of friends that friendships between Democrats and Republicans. And it's really shocking how low it is. And that'll be our panel discussion of the week. It's really amazing. They've divided the country. It's like almost like a civil war. So anyway, we'll see you in 2 weeks on August 9th, starting on August 19th, with Lawyers Den at 6 o'clock and Wall Street Hackers about 6:15 Eastern Standard Time. Thanks for watching. We'll see you soon. As Kim always says, get healthy and get wealthy.
And hopefully she gets healthy. We'll see you then. All right.
Bye-bye.
Bye-bye.